Welcome once again. Today we're going to take a look at overview of business taxes in Nigeria. Most of us don't know the tax we pay in Nigeria. Most of us don't know how many taxes that businesses encounter in Nigeria. Most of us just know VAT, yes, CIT, EDT, some capital gain tax, and what. But here we're going to give you an in-depth overview of business taxes in Nigeria. And we're going to take it calmly as we go. So sit back and go with us. In Nigeria, companies are subject to various types of tax, each with specific regulation and implication. These taxes are designed to generate revenue for the government and are governed by the Federal Inland Revenue Service (FIRS) and other states tax authority. Below is the overview of the main types of taxes applicable to companies in Nigeria. Number one is company income tax, which is what CIT. Company income tax. Company income tax is the most significant tax for companies in Nigeria. It is levied on the profit of Nigeria company and those earning income within Nigeria. The CIT rate is generally 30% of taxable profits for large companies, which are defined as those with an annual turnover of over 100 million. For medium-sized company, annual turnover between 25 million and 100 million. The CIT rate is 20%. Small companies with an annual turnover of less than 25 million are exempt from CIT. It is important to note that a foreign-owned company cannot be categorized as a small business, since a small company is expected not to have more than 1 million authorized share capital, which far below the minimum share capital threshold required for foreign-owned company. Yes, this is the first tax that businesses in Nigeria pay, company income tax. Let me give you a breakdown of what is here. A company that that made a revenue in a year from 0 to 25 million is not subject to pay tax, to pay CIT. Even the company is not even supposed to remit VAT. Yes, if you know that within 1 year you cannot make above 25 million naira, don't remit your VAT to FRS. You are exempted from all form of taxes. Take me to anywhere. But the problem is when you are not remitting your VAT and maybe towards the end of the year you hit a contract that now made your revenue to hit above 25 million, you've entered a trap net. Then they will now revisit your VAT. You've not been remitting VAT, you made so amount and you are not remitting VAT. So amount you are not remitting VAT. So that, but if you are confident within yourself that you cannot make 25 million naira in a year, you are not supposed to file VAT. But if you are not confident, you can keep filing your VAT. Even when you did not make up to 25 million naira in the year, the only thing is that you'll be exempted from CIT. So company with 0 to 25 million are exempted from tax, from paying company income tax. That is what this place is saying. Now, from 20 above 25 million to 100 million, pay 20%. That is the threshold, 20% of their tax for tax. Now, when a company makes 100 million. And they found that after the operation, they found out that the company made loss because the 20% is charged on the profit, not on the revenue. Revenue is just a threshold to know if this company fall within the companies that pay tax or not. That's the threshold. But the 20% is up is focused on the profit that the company will make. Eventually, if the company did not make profit and they made loss, what happened? You cannot make 100 million for in your business. You cannot make 100 million in your business and you say you made loss, that you will not pay government anything. You self-check, it's not proper. So that is why the tax authority now came up with what we call minimum tax to curtail this. So even if you tell us that you made loss, fine, good and fine. We believe you that you made loss. Then we will now compute minimum tax of 0.005 on your revenue. You hit it on your revenue. Whatever you give us, you that is what you pay, whether you make loss or not. Now, if you made profit and the minimum tax the tax authority computed is higher than the amount of 20% which you computed. In fact, they go for the higher one. With these two, they go for the higher one. I was preparing an account for a company that made over 400 and something million naira. And the company said that they want to pay 6.7 million at CIT. I told them it's not possible. 6.7 is not feasible at all. The least you can pay, that 400, use 0.5% on that 400. Yes, 0.5% on that 400. That is the minimum you can pay. I think it's about 21 million. The man shout, hey, yeah, that is it. The minimum. They choose whichever is higher. So from 100 and above, pay 30%. That is the threshold. So if there's any confusion there, please just let me know on the comment section. Now let's move down to the next. Now, calculation and filing. Taxable profit. This is the profit after adjusting for allowable deduction, non-allowable expenses, and tax incentive. I did a video on allowable and disallowable expenses. You can check my videos and you get more explanation on that if you are confused about it. Now, filing deadline. The filing deadline, sorry. The filing deadline. Companies are required to file their CIT returns annually within 6 months of the end of the accounting year. Now, for those whose accounting year ends 31st December, they are to file their CIT. We are in 2024. Now, the deadline for, is June 30th. January, February, March, April, May, June. 6 months. June 30th. After 30th, and you did not file on tax promise, you will be penalized. And if you did not file at all, it's a crime. You still be what? Penalized. Not filing is a crime at all. So you just have to file. But the deadline is 6 months. 6 months annually. And it is what? Annually. Annually. Right now, let's check the next one. Value added tax, VAT, which is the most popular one we know in our dear country. Value added tax is a consumption tax levied on value added at each stage of production and distribution. The standard VAT rate in Nigeria is 7.5. 7.5 is the VAT. Now, applicability. VAT apply to most goods and services, both imported and locally produced, except those significantly exempted. What are those ones that are significantly exempted? Basic food items, medical and pharmaceutical products, educational material, because these things are very essential to human. So that is why they exempted it from VAT. So if you are going to buy any food item and you see VAT amount inside, you have the right to pick that supermarket or that how will I say it, that company. You can sue them because they are not supposed to charge VAT. They are not supposed to add VAT on basic food items, on educational material and medical and pharmaceutical products. So just know this. Filing and payment monthly. VAT is filed monthly, while CIT is filed yearly. VAT is filed monthly, and you must file your VAT on or before 21st of the preceding month. Now, the return must be filed monthly on or before 21st day of the month following the month of transaction. Like we are in January, the VAT for January will be filed February. And the time limit you have to file it is from 1st of February to 21st of February. Anything outside there, you have to regenerate and you pay the penalty. Payment VAT collected from customer must be remitted by the company to the Federal Inland Revenue Service. All VAT is going to Federal Inland Revenue Service, be it business name, be it incorporation, be it individual, as long as it's VAT, is going where? To the Federal Inland Revenue Service. They are the one that collect the VAT. FCT state IRS don't collect VAT. VAT is solely for what? Federal Inland Revenue Service, and it is filed monthly. Let's take a look at education tax. EDT, education tax. Education tax, also known as tertiary education transfer. Now, the tax paid on this are what they use to develop the higher institution in Nigeria. Though you might go to some high institution, you see text fund on a project they are building. Text fund, text fund. So those are the things they use this money to do. But in some schools, you see text fund for years, you still read their text fund. They'll give money and they'll use money to do something else. But the main purpose is for them to establish building structures in higher institutions, secondary school, primary schools, for education purposes. But at times in Nigeria, you know our Nigeria now, God will help us to do things right in this country. Now it's imposed on all Nigeria companies at the rate of what? 3% of accessible profit. Now you know what is accessible profit, right? When you get your profit, you add back your depreciation. Bam, you have your accessible profit. That is what it is charged upon. While your CIT is charged after you must have deducted your capital allowance. Then you hit your rates, either 20, 30, whichever rate it is, to get your CIT for the month. Now, the revenue from this tax is used to fund educational institution in Nigeria. Hope I'm not too fast, but then I just want to make sure the video is not too long. Filing and payment. Annual filing. The EDT is calculated based on the company accessible profit and it is filed alongside with the CIT return. Yes. If you are familiar with tax programs and you're filing your audited account for the year, once you file, at the end of the filing, you see EDT, CIT, police trust fund, NITDA, All those things are form of tax. They are filed alongside the CIT, and it is filed annually. The tax is paid annually to FRS, Federal Inland Revenue Service. Your CIT, your EDT is paid to what? FRRS, Federal Inland Revenue Services. No, not states. Hello, not state. For example, POSIS is to help you. For example, POSIS, it will help you. Right? Good and fine. Everything to Federal Inland Revenue Service. Personal income tax. Personal income tax is also a tax that businesses in Nigeria pay. Now look at what they do here. It's levied on the income of individual, including the income earned by employees of company. Company are responsible for deducting and remitting pay as you earn, tax on behalf of their employer. Now, payee is what state internal revenue services are entitled to. For their employer, the employer pays and also the employee pays their tax to what? State internal revenue services. Right? Let me just emphasize on this more. Your salary might be 100 naira, and your pay might be 10 naira. The employer have the sole right. They've given him the right to deduct your pay before giving you your salary. Now he will minus 10 naira from your salary and give you 90 naira as your salary. And when you ask, so what about the 10 naira? I say, it's for your pay, you have to pay. If you did not deduct it, as a penalty for that. Deduction and remittance payee system. Companies deduct PIT from employee salaries and remit it to the state inland revenue service of the state where the employee resides. Filing. Monthly returns must be filed, detailing the deduction made. As long as they pay you salary monthly, your payee will be remitted monthly. But in some cases, some company might encounter some difficulty, like they might have a bad season, which they cannot raise the salary of their staff for like 1 month, 2 months, 3 months. In this case, if you want to remit to the State Internal Revenue Service, you state your reason why you are remitting it late. That your business was not doing well and you could not pay the salary of your staff on time. This is the time you have the money to pay. At least they will listen to you and they will consider, and no penalty might be attached to it. Depends on your relationship with them, right? Good and fine. So withholding tax. Withholding. Withholding is not a type of tax. Let me emphasize on that. Withholding is not a type of tax. If they say list the type of tax you have in Nigeria, please don't list withholding. Withholding is not a type of tax. It's an advance payment of tax that you can also claim at the end of the year when filing for your CIT. Right? Good and fine. Let's take a look at it. Withholding tax, WHT, is an advance payment of company income tax. It is deducted as such from certain payments made to company and individual. I said it's an advance payment. When somebody comes to you carried out a professional service or a contract for a company. Before they pay you, they will deduct VAT, they will deduct withholding, they will also deduct, I think, stamp duty and one other tax. Now, this money deducted will be paid into your account on tax program. Now it's on tax program to be paid into your account on tax promise. It will be there for you, just that you cannot access it physically as your money. But when filing for your account at the end of the year, you can use it to offset the amount of tax liability that you're supposed to pay. Hello, is that clear? Good and fine. Now, type of payment. Withholding is applicable to various types of payment, including contracts, dividends, interest, rent, and royalty. Now, I was preparing a financial statement for a company, and the I saw rent of 50 million naira. You know, the rent of 50 million naira. I called the owner of the company. I said, please, you have a rent of 50 million naira. Hope you've remitted your withholding of 10% to FRS. He said, no. I told him, you better do that now. You are not supposed to pay the owner of the house the full amount, that 50 million naira complete. You are supposed to deduct withholding of 10% from that 50 million naira and pay him the net. Then you remit the remaining ones to FRS. That's how it's being done. Rent, contract, or you don't pay the gross amount, you pay the net amount to the person, and the remaining one you remit it to the tax authority. It is your right. The tax authority has given you that mandate, that right to do it. And when you fail to do that, it becomes a problem to you because the tax authority will come for you. Right? Wait, the rate vary depending on the type of payment and the recipient. For instance, the withholding rate on dividend, interest, and royalty paid to companies is 10%. Initially, before the amendment of this new withholding, withholding, companies, individuals, and public limited companies, they have 5%, 10%, but now it's like they've streamlined virtually everything to 10%, but not all. But I know of rent is 10%, be it individual, be it not individual. It is what 10% now. So it's good to update yourself with the tax information, the tax, how do I put it? You understand? Yes. Filing and remittance. Monthly filing must be filed withholding returns monthly on or before the 21st day of the month following the month of deduction. It's just like your VAT, the way you file your VAT. But filing it or tax format is different, but it's the same time period you use in filing your VAT. Now, remittance, withholding tax deducted must be remitted to Federal Inland Revenue Service or State Inland Revenue Service as applicable. If you are dealing with an individual business, you give to states. A public liability limited, you give to FRS. So where applicable, right? Now, capital gain tax. Capital gain tax is charged on the disposal of company capital assets. The rate is what? 10% on the disposal of company capital assets. Applicability. Chargeable chargeable assets. Capital gain tax is applicable to gain arising from the sales of capital assets such as real estate, shares, and other investments. These are examples of capital assets. Any profit you make from the sales of real estate, shares, and other investments, you charge 10% of it and remit it. Right? Now, exemption. Some exemption applies, including gains from the disposal of shares and gains used to purchase similar assets within a specified period. These are the exemptions you can get. Filing and payment. Annual filing. Capital gain tax returns are filed what annually. Payment. The tax is payable by the company that realized the gain. You that realized the gain, you are the one that will remit it. Now, stamp duty. Hope, yes, we are moving. Stamp duty are taxes levied on documents and transactions. The rates are ap- the rate and applicability varies. The rate and applicability varies. Stamp. I went to the post office, wanted to deliver a mail, and I was asked to buy stamp. How much was the stamp? I think I bought it for 100 naira to 200 then. They say without this stamp that this document cannot go. That is the stamp duty on documents and transactions. You have to pay levy on them, tax levy on them. Chargeable instruments. Stamp duties are applicable to various documents, including legal agreement, lease, and share capital increase. Rates can be ad valorem, a percentage of the transaction value, or fixed. Can change, it can be fixed. Filing and payment. Stamping. Document must be stamped to be legally enforceable. Payment. Stamp duty are paid to the relevant tax authority, either FRS or State Internal Revenue Service. Now, information technology tax. Have you heard of this before? Information technology tax. uh, most of us have not heard of this. It's among those tax we pay. Information technology tax is imposed on specific company, not a company, specific company to fund the development of information technology in Nigeria. Eligible companies. Companies in specific sectors such as telecommunication, banks, insurance, and other financial institutions with an annual turnover of 100 million or more. Hello, 100 million or more. So if your turnover is less than 100 million, you'll be exempted, right? So that is that. The rate is 1% of the profit before tax. Filing and made. Filing and payment. Annual filing. IT tax is calculated based on the profit before tax and filed annually. Payment. The tax is paid to the National Information Technology. This is also filed alongside with your CIT and your EDT. Police Trust Fund, all that. Now, Development Agency NITDA, National Industrial Training Fund levy. These are some levies companies pay. Most of us might not know this, but it has come to you for you to know it. Levy is designed to fund industrial training and skills development in Nigeria. Eligible employer, companies with more than 5 employees or an annual turnover of 50 million or more. Rate is 1% of the company payroll. So if the company payroll is 5 billion, just give them 1%, 2 million, 1%, as long as they have more than 5 staff. Filing annually, it is filed annually. That we file return and pay the levy annually. Right? So employment compensation scheme, this is your NSITF. It's a form of social security that provides compensation to employee for work-related injury or disability. The scheme is administered by Nigeria Social Insurance Trust Fund. This one is for the purpose in case you are working and you have one injury or the other, you'll be compensated with this as long as you are abiding by the rules and regulations of this, you'll be compensated. Employers. All employers are required to contribute to the ECS rate. The contribution rate is 1% of total payroll cost is for annually. Filing and payment, annual filing, ECS, contribution are calculated and paid annually. Benefit. The scheme provides medical and financial benefit to employee injured at work. Maybe in your office, one or two happen and you are injured or you are sick, they will compensate you from here. You don't know this before. You know, at times when we don't have this information, the money will be lying there. Like Nigeria, if you don't shout out to claim all these things, they'll just keep the money there and do justice to it. But once you know your rights, you can exploit all these means and get your benefits. Now, in conclusion, understanding the various types of tax applicable to companies in Nigeria is crucial for compliance and effective financial planning. These tax include CIT, VAT, EDT, PIT, WHT, CGT, stamp duty, IT tax, NSITF levy, and ECS. Each tax has specific rates, filing requirements, and deadline, and company must adhere to these regulations to avoid penalty and ensure smooth operation. Engaging with tax professionals and staying updated with changes in the tax law can help companies navigate the complexity of the Nigerian tax system. Engaging with a tax professional and staying updated is the key word for me. If you are a business owner, engage what? A tax professional and also stay updated for tax purposes. All this I have mentioned can only be carried out effectively by a tax professional. So if you are one that is aspiring to become a tax professional, you should know all these updates and keep yourself updated with other regulations and you become hotcake. For as, example purposes also, tax professionals are the endpoints to all this, and God will help us all in whichever field that we've chosen. For example, pose career wise, God will help us and grant us all we wish and put this in our hearts so that we'll be good in what we do. In Jesus' name. Amen. Thank you very much. Thank you and God bless you. See you in my next video.